This trading mistake added months to my trading journey, and it not only made me lose confidence in trading, it made me hesitate taking trades. I would see a point of which price would come to, I would take the trade, I would have no context out of incomplete information, I would just try to predict the move, and I wasn't actually observing the market because I was afraid I was going to miss the big move. So if you can relate to this, if you need help with this, because I know as a beginner trader I needed help with it, we are going to stop being scared of missing the big trades, and we going to become an observer of the market. So let's just jump right into it. So we have buy side liquidity, a bigger time frame, a fair value gap. We also have sell side liquidity about to get hit. What a lot of people would do here, sell side gets taken, and immediately people would jump into a trade. Put your stop at the low, put it at the external buy side liquidity, and then price would end up not going in your favor because you tried to predict this move higher, but it simply, there was no context for it. So the chop stops you out, and now you're stopped out. You're confused why this move didn't happen. Is because you're looking at the wrong time frame. You're looking at the bigger time frame bias. You want to see this get tapped into instead of zooming in. Okay, we realized we just created manipulation. This is what being an observer of the market is, the difference of being an observer and a predictor of the market, because you wait, you realize you created manipulation, waiting to see what price does. Price begins to then have a clear change in the state. After taking sell side, took sell side, manipulation leg, change in the state, potential retest to a fair value gap down here. Price then hold up. Price then goes up, taps back into that fair value gap. You buy here. You target TP1, and you also have external bias target, which then price would then, if you get up here, this would be you're changing the state on a higher time frame. Once you get past here, change the state, this is when then you start going for the external time frame. People are too zoomed out on taking trades because you see this model right here. You see sell side was just taken. You want to see price go higher. You have no clear change in the state. You then need to zoom in. Price creates a manipulation leg, has a change in the state in the 1 minute. You can target this internal high. Once you target this internal high, it also creates a higher time frame change in the state, then having confirmation for it, price then to begin going higher to this external bias. That's how people go for the insane massive trades people take, because they look out from a wide standpoint. It's all perspective. Trading is all perspective. They see what the market is wanting to do from a wide standpoint. They have a bias and where they draw liquidity wants to be. They then begin to zoom in to see where the internal draw of liquidity wants to be, and if that internal draw gets hit, then most likely going to the external draw.